Ladies and gentlemen, welcome back to the channel. This week is the last week of 2024 and the first week of 2025. And while a lot of people are fearful, I think it's a good time to be a little bit greedy. As Warren Buffett said, be fearful when others are greedy and be greedy when others are fearful. And people are definitely fearful. And we could see the markets act pretty weird, according to some people in this week, and I will explain how that weird market could actually transpire. Now, Tesla is going to have a huge week this week, and I will explain exactly what we need to be watching for coming Thursday on Tesla's delivery number, because this is a huge catalyst. So first and foremost, Tesla, okay? We are expecting Tesla will deliver around 506,000 vehicles for Q4. That is the official consensus that Wall Street is at currently. Now, there's only 26 different analysts that have actually provided estimates. Sometimes, like last quarter, it was 32. So you could definitely see this number go up a little bit and this number fluctuate a bit heading into Thursday's January 2nd delivery number. Now, last quarter, consensus was pretty much spot on. They were about 900 deliveries lower than what we actually got. So last quarter, consensus was correct. This quarter, I don't think consensus is going to be as correct. As I've explained in previous videos, in a worst case scenario, you're looking at about 485,000 deliveries. In a base case scenario, you're looking at about 535,000 deliveries. That is my reasonable estimate, about 535,000 deliveries. In a best case scenario, you're looking at about 575,000 deliveries. Now, that may be a little bit too optimistic, but I think we are going to beat the estimate of 506,000 deliveries. Now, if you want my honest opinion on this, whether we come in at 500,000 deliveries, 535,000 deliveries, 510,000 deliveries, I don't think it matters, right? Now, Wall Street, yeah, sure, they're going to care about this for a couple of days. But 2025, the much bigger picture here is about autonomy. It's about robotaxi. It's about development of Optimus. It's about Tesla taking the reins of the AI leadership. Okay, Tesla is going to be the number one AI stock on our markets. I don't think Wall Street has actually processed that yet. When people talk about the number one AI stock, Tesla hardly makes top three. And depending who you ask, it's not even top three. In 2025, Tesla will be the dominant AI stock. Okay, that's just the fact of the matter. Now, you have to kind of differentiate because you have AI enablers and you have AI appliers. Okay, AI enablers, AMD, NVIDIA, TSM, right? The companies that have already been at the forefront of the AI leadership, SMCI, right? Even Dell and some of those guys. The AI appliers, going to be a Snowflake. They're going to be a MongoDB. They're going to be an Elastic. All of these stocks I personally own. Tesla, right? These are your AI appliers. And Tesla's number one here. Nobody's doing anything like Tesla with AI. And that's the big story next year. Now, sure, our 10-year treasury yields, depending on what they do, going to impact how good Tesla or how bad Tesla does next year. Sure, is some Trump tariff policies going to affect Tesla next year? Sure, is delivery numbers going to affect Tesla next year? Sure, to a small extent. I think next year is really going to be about autonomous vehicles. It's going to be about the AI story. And as long as Tesla succeeds in robotaxis, that's what is going to be the biggest driver of Tesla. That's going to be like 80% of Tesla's move next year. and even to start 2025, like it actually could start pretty aggressively. And the other 20% is going to be deliveries. It's going to be, margins in the short term. It's going to be Trump tariffs, 10-year treasury yields, the Fed, right? 20%, or so of Tesla's move will be those things. So this delivery number doesn't really matter too much in the grand scheme of things. But we will get this number coming out January 2nd. That is on Thursday. Now, one big reason specifically, I think we're going to have a very strong delivery number for Tesla is the $7,500 tax credit. Okay. Now, we've seen on Google Trends, and I can go ahead and pull this up as I speak. You've seen Google Trends do very well, specifically in the United States. And the reason I think for this is the $7,500 tax credit. Pretty much everyone expects that is going to go away next year. If you have ever been in the market to purchase a Tesla, to purchase an electric vehicle in general, you're better off doing that this year than waiting till next year and potentially not getting that tax credit. Okay, right? That just makes a lot of sense. So it does seem like to me you've had kind of an artificial push, if you will, in the United States of people going out and making that decision to buy a new Tesla based on the expected removal of the $7,500 tax credit. And that's why I'm considerably higher than Wall Street consensus right now for deliveries, again, at about 535,000, whereas Wall Street consensus is at about 506,000. Now, if we also look at global inventory numbers, okay, they are plummeting, right? They are falling a lot. The Model Y is at 3,000, the Model 3 at 2,300, the Model X at 1,400, and the Model S at 1,100. They are running through inventory. Now, this is suggestive of a great quarter. Okay, this is suggestive that Tesla is selling everything that they can produce, and they're selling much of their inventory. So this is a good sign for obviously profitability, but I think it's also a really good sign for demand. And that's why I think come on January 2nd, on Thursday, we could actually see a pretty explosive day for Tesla stock as long as that delivery number is good. And at this point, there's so much fear out there in markets that you could see an extra large move based on Tesla's Q4 deliveries. Now, sentiment for Tesla is neutral at 50. Yesterday, it was neutral at 46. So that's a little bit better. Message volume today is low at 38. Yesterday, it was low at 41. And participation ratio today is high at 56. And again, Tesla has fallen from $488 down to $431. That's kind of the gap that could be filled this week with a better than expected delivery number. I mean, more broadly speaking, when you look at the RSP that is down at this point, 6% from all-time highs. It was down about 8% from all-time highs. I think markets are, so negative right now that you should probably be bullish. I've talked about this in previous videos now, but it's especially obvious to see when you look at the percent of stocks trading above their 50-day moving average, sitting down here at very correctionary levels. Typically, this is when things get better for markets, when 35% of stocks are trading above their 50-day moving average. This means 65% of stocks are currently in a downtrend. Anytime you're in a bull market and 65% of stocks are in an active downtrend, trading below their 50-day moving average, this is when you want to close your eyes and buy. Now, what's interesting though, is typically when you're this negative on markets, the index is down more. So it's more of an obvious buy, right? The last time we were down this much was August 5th. index was down 10%. And the time before that was April of 2024, and the index fell 7%. This time's a little different because the index is only down about 2.5% for the headline S&P. Now, again, the RSP is down 6%. It was down about 8%, so that looks a little bit more obvious. The carnage we've seen in the broader markets. The headline S&P does have some risk, okay, heading into 2025 because of this, because of big tech. Now, we seen on Friday, big tech, they were the underperformers. Now, if big tech continues to sell down, you could see a broader market rally, or at least broader market stabilization, right? You could see maybe even Tesla. You could see PayPal. You could see Palantir. You could name the stock, a Dollar General, an AbbVie. You could see healthcare and cyclicals and value and all these other areas start to do a little bit better. Perhaps the tax loss harvesters start to buy them back this week. But you could see big tech get sold off because nobody's super bullish on big tech next year. And if big tech gets sold off, the market cap weighting in the SPY would likely send the SPY lower. Okay, so that's kind of, I think, the risk in this upcoming week. Does big tech get sold? Do you see the gap between the RSP and the SPY? RSP, again, equal weight S&P. SPY is the market cap weighted S&P. Do you see that gap narrow? Okay, it's really wide right now. Again, the SPY is only down 2.5% from all-time highs. The RSP, even after this bounce, is down 6.5% from all-time highs. Does that kind of narrow a bit? Could the RSP go up 2%, only be down 4%? Could the SPY drop another 1.5% and be down about 4%? That, I think, is the potential risk that could happen this week, maybe, into next week as well. Now, if you're a stock picker, if you're in Tesla, I think that would be great, right? I think Tesla is not going to sell off with big tech. I think Tesla is going to do very well into January. That's just my opinion. That's what I'm seeing. That's what it looks like people are positioning for. And I see no, at least at this point, change in the technical trade. Ever since the lows we hit back here at $138 per share in April of 2024. By the way, I was screaming to buy Tesla stock then. And really up until, the 220s, I was really screaming to buy Tesla during these levels. Well, ever since then, you have hit higher lows, right? During every rally we have seen, you have hit a low that was higher than the previous low. Okay, even up until now, right? Look at, between December 20th, December 23rd, you hit this low at about 414. You rallied again back to about 465. Now you're back down to 430. Assuming this is a low, we'll have to see. Then, we have again hit a new higher low. That is a bullish trend if markets do start to go up again. Right? So you'd really want to be a little bit more concerned if Tesla were to fall below like 415, right? 414. A close below there would be the first lower low since April of 2024. Okay. That would be concerning of a larger kind of pullback. And I don't think it would be just Tesla specifically. Again, unless Tesla utterly misses on deliveries, which doesn't look likely, then I think it'd be the broader markets kind of pulling Tesla down. In a new video that is out today, FSD miraculously avoids a very close accident on the highway. I mean, this is...
The trucker tried swerving away from the...
Truly impressive. Imagine how many lives would be saved if this technology was more widespread. TrendSpider on X put this chart together of consolidation phases followed by expansion phases. And it appears like we are in the process of an expansion phase. This is using a monthly candlestick chart dating all the way back to 2012 era. with a lot of people suggesting that they are targeting $500 to $600 in Q1, including Trading Wars here with 121,000 followers on X. He says he actually last added at 435, which is, not a bad level considering we were just at 488. And as long as, again, we stay above that 414 level, that 415 level, which was Tesla's previous all-time high, that would be good, right? We did see a lot of demand come in around that level on this wick, right? And that's why I said, and I explained this day, this was on December 23rd, that Tesla stock was probably going to recover quite a bit over the coming days. And that really reinforced that year-end rally, in my opinion. Now, I was correct. The next day, Tesla went up 7.4%, but then the following 2 days were really bad again. And it was kind of hard to explain what happened on Friday. There wasn't a clear reason for the sell-off. There was 10-year treasury yields, right? They went up 5 basis points. There wasn't really any data, wasn't really anything that happened, but Tesla fell 5%. Now, some people say this is a low liquidity period, and that's probably why Tesla sold off, and that could be fair. If that is the case, we would want to see a bounce coming tomorrow, or at the bare minimum, we want to stay above 415. If we stay above 415, then the situation still looks pretty good. Now, in case you missed previous videos, option activity on Friday from hedge funds and institutions was pretty positive. You had 233 different trades totaling $193.2 million with a positive order value of 67%. So it wasn't great, wasn't terrible by any means. Now, last week in its entirety, you had 2,025 different trades totaling $3.06 billion with a positive order value of 87%. So that was very, very positive. And we did have a lot of shorts adding to their short positions on Friday. You had borrowed shares of 3.22 million and return shares of 1.45 million. That means you had 1.77 million shares on net that were actually sold short on Friday. Now, short interest of free float sitting at 2.89%. You have $36.6 billion sold short in Tesla currently, totaling 80.59 million shares. That is a lot of shares that are sold short that are going to be pressuring the short sellers, I believe, in early 2025. I mean, I think these hedge funds and institutions are playing with fire shorting Tesla stock here. So all in all, Tesla stock fell 5% on Friday for very little reason. I think we do see a bit of a recovery in the early part of this week. Now, Monday and Tuesday are the last 2 trading days of 2024, and tactically speaking, I think it makes sense for short sellers to cover on their short positions. So we will see if that happens. Monday and Tuesday could be great days. Obviously, the big catalyst for this week is Thursday's delivery number. And as long as that comes in good, then you could have an even better week. And I think the odds are good that we're going to come in higher than 506,000 deliveries. So I think the odds that this week is a good week are much higher than the odds of this being a bad week. Again, as long as we stay above 415, none of this really matters. If we break below 415 and really get a breakdown, you'd want to see a break below actually 413. That is your 20-day moving average. Like if we just fall below 415, kind of hit that 413 20-day moving average level and then bounce, not a big deal. If we actually close and flush below 415, that would be a sign of a larger pullback. And that's when I would get a little bit more nervous about larger downside, because then you have some gaps to fill, potentially back down to the 360 level, which again, I don't think that's going to happen, but something we want to be watching for. Okay, I think January is going to be a great month for Tesla. I will explain more of that in the next video. Ladies and gentlemen, that is going to do it for this video. Hit that like button and subscribe to the channel if you own Tesla, if you like Tesla, if you like these videos and you like to stay informed. This is your place to be. I am not afraid to share my opinions, but when I share my opinions, that does not mean that you go out and YOLO portfolios in Tesla stock if I am bullish or if I am bearish. I've had a lot of people say I've costed people a lot of money. I don't know how that's possible when I was screaming to buy Tesla in the 130s, 150s, 160s, 200s, and Tesla is now a $431 stock. The only way you lost money is if you went out and bought a bunch of options because I was bullish on the stock. That, my friends, is not my fault. I've never once said that. I literally once said that I would put $20 on a call option for last Friday, right? $20, literally a $20 bill on a large rally happening on Friday. That's it, right? That does not mean go put $20,000 on a short-term Tesla option. Come on, we got to have some common sense when we are investing our money. So I appreciate those of you guys that do have that bit of common sense. Yeah, crazy. Thank you guys for watching. Enjoy the rest of your day, and I will see you in the next one.